It's time for charting futures. It's Abigail Doolittle. And Abigail, I mean, talk of a risk-off day. Stocks down, havens, they're in vogue.
Oh, you're right about that, Caroline. It certainly is a risk-off day. It's very fitting to the volatility that we've seen since that July 31st Fed meeting, that FOMC decision that has put more volatility into the markets than you can imagine, cross asset class too. Take a look at the S&P 500 futures, near session lows down 2.8%, at the lows down more than 3%. Crude oil joining in, although well off the lows, at the lows down more than 5%. That 30-year low, check that out, rallying to such a degree that the yield is down 13 basis points, hitting a record low today. And the one I'd really like to highlight, take a look at the dollar yen. So the inverse of that tells you the yen is rallying in a big way, up 0.8%. Since that's not directly affected by accommodation by central banks, perhaps that's the true haven asset out there. So let's connect that to the S&P 500 in a chart that we've looked at many times. Very, very interesting. This goes back to 2011. In white, we're looking at the dollar yen. So when it goes higher, that tells you it's risk on. That's fitting to the S&P 500. In blue, climbing higher. And then in 2015, we see some volatility for the dollar yen as the yen catches a bid. That as the S&P 500 goes into a correction. We saw a similar situation back in early 2018 at the end of last year, of course. And now we have the same deal. And take a look at the dollar yen. It's starting to break out of that range to the downside. It really looks like the yen could catch such a bid. If that continues, it would suggest that there will be enough investors, traders going into haven assets, out of risk assets that could over time be bearish for the S&P 500. To talk more about this, I'd like to bring in Eric Dugan of 3D Capital, who only trades S&P 500 E-mini futures. And to such a degree, a moment ago, I had to fight you to get off your phone because you have a position on. So thank you for taking the time to be here with us.
Thanks for having me.
What do you think about that dollar yen chart?
It's disconcerting. Back in April and the end of April and the mid-July, we actually look at euro yen.
Okay.
And if you looked at euro yen at the end of April, that preempted the sell-off in the stock market. We saw a move lower in euro yen at the end of April and mid-July. So well, not surprised with what's happening now.
Yeah, and it's yen. It's certainly a tell on when investors are going into safety, even if they're just treading water. But you're looking at global positions all the time, and you've been talking to us many times about the global relay race. So this goes back to the beginning of last year. And in yellow, we're looking at the E-mini futures. In blue, we are looking at the DAX, and in white, the Hang Seng. Talk to us about why this chart's important.
Well, if your viewers go and look at or Google stock market crash of 1987, it will say it started in Hong Kong, spread to Europe, and went to the U.S. So there are statistically significant patterns that can identify strength and weakness. Today, specifically, if you looked at what happened today, the Hang Seng was down about 2%. Europe, the Euro Stoxx, DAX, FTSE, they were down as well, and then the U.S., the S&P confirmed.
Although the Hang Seng actually reversed to be fractionally higher, I believe.
You may be right, but we look at open to close.
Got it.
I warn you, viewers, it's not just close to close, it's open to close. So if you look at the open to close of the markets, there will be certainly clues in what's going to happen around the world.
And certainly over this time period, the S&P 500 has gone nowhere. It's basically flat, that Hang Seng in a bear market. So now let's connect it to another chart that you have of the E-mini futures, a longer-term weekly chart. And if you can talk to us about, what you would do around this.
All right, so interesting you say the S&P is about flat. So from October, basically from January of 2018, so from here, we're up about 7%. If you look from January of 2018 through August today, we're up about 7%. We have clearly entered a new volatility regime. These arrows indicate an average of 10% drawdowns. You've had roughly 10% drawdowns, one as great as 18%. So we have definitely entered a new volatility regime, and we use the E-mini S&P to take advantage of that.
Got to be nimble. So let's very quickly talk about why you do use those E-minis, because there's so much volatility right now. Here are a couple of the points, but what's the main point that you
Main point is the E-mini S&P can be used to take advantage of volatility. You can buy it to make money, you can sell it to lose money. Volatility is your friend. The E-mini S&P helps you in times of volatility. No anxiety, it's more opportunity, and we use the E-mini S&P on a daily basis.